When the market seems completely removed from reality, what determines stock prices? What are the factors you can watch to know where stock prices are going? In this video, I'll not only show you how stock prices are calculated, but also share 5 forces you can watch to know where those prices are going. We're talking why stock prices change today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now Nation, we see a lot of great questions in our private Facebook group, Let's Talk Money Together. And one of the most common is simply, what determines a stock price? And there's actually a lot more in that question than you might think. It's more than just the basics of how a stock price is calculated, but the factors that go into changes in that stock price. Even more important, it's how to determine a fair value around the price. So that's what I want to do with this video, show you not only what determines stock prices, but the 5 factors you can watch to know where that stock price is going. I'll also reveal a few ways to calculate a fair price on your investment. So at its most basic, a stock price is just the market value of a company spread across all the shares outstanding. Now, stocks are an ownership of a company, so it's whatever investors are willing to pay spread across how many investor shares there are. Let's look at an example here with Apple, ticker AAPL, and we can see that the market capitalization, that's the value investors are willing to pay for the company, that's about $1.31 trillion. Now we can find how many shares or pieces of ownership in the statistics tab on Yahoo Finance or just about any investing platform. Now we know that Apple has about 4.33 billion shares available. So that's $1.13 trillion in the company value divided by 4.33 billion. That's going to give us a share price of around $302 per share. Now what's interesting here when you look at these numbers and think about this is that you realize stock price has very little to do with whether it's a good investment or not. Now a lot of investors are going to look for stocks under $5 a share thinking it's a bargain basement deal. Or maybe they'll think that a high stock price means it's a strong company. For example, regional bank Mars Bancorp here has a $340 share price, which seems really strong, right? But the shares are down more than 12% this year, and the company is really only valued at $27 million. The high share price is only because it has less than 100,000 shares issued. By comparison, look at Zynga here, ticker ZNGA, with a price under $8 a share. It's jumped 34% over the last year and is valued at $7.6 billion. Now the reason the stock price is so low though is simply a matter of almost a billion shares issued. So instead of looking for those low price stocks or thinking that a high stock price is good, let's look at 5 factors that actually do cause a stock's price to rise or fall and how to determine a fair value. The first factor here is going to be a change in the company's earnings or its net income. Every publicly traded company, so every company with stock is going to report its earnings 4 times a year at the end of its quarter, and the market follows every word of these announcements. Since stocks are an ownership of the company, the stock price is a direct reflection of how much those earnings you actually own and whether they're going to be going up or down. And we can use the analysis tab here in Yahoo Finance to look at these earnings, but you can find these on any investing platform. And personally, I like to use my Webull account because it shows you all the earnings dates for each company as well as some really important information. But I want to use Yahoo here because it's easily accessible for everyone. So the first thing you see here is that 36 analysts have an average estimate for Apple shares for Apple to make $12.32 in earnings for the current year. You can see the high and low estimate here as well as what earnings were last year. So this gives you an idea of the value in the shares as well. If Apple stock is trading at about $301 per share and the company is expected to produce $12.32 per share in earnings, then investors are willing to pay a price of 24 times those earnings. Now what you can do with this price to earnings ratio, so the price divided by earnings, is you can compare it against other companies like Microsoft or Samsung, so competitors of Apple, to see which company is trading inexpensively. Conversely, you can also use it to compare against Apple's own PE history. So if Apple has traded at a price of 15 times earnings in the past, we can say that now at 24 times, it's relatively expensive. Now, I want to point out something important here, and what you'll see in all of these factors is it's not so much where they're at right now because that's really already priced into the stock. The market knows how much Apple is producing in earnings, and what's important to whether the stock price goes up or down is how these factors develop into the future. That's where it takes some analysis, and it's why most Wall Street analysts only really follow a handful of stocks. You need to follow these 5 factors for each of your stocks, understand the direction they're heading, and then develop your own opinion for the future. For example, if we go back to the analysis tab again on Yahoo, and for those shares of Apple, we can see the earnings history over the last 4 quarters, including that surprise percentage. So how much Apple has beaten analyst estimates for earnings. Now your job though would be to take everything you know about Apple and the rest of these 4 factors that we're going to talk about, and then decide whether you think earnings are going to surprise to the upside by more they have in the past in those next 4 quarters of earnings. Now just like we looked at for those earnings, there are some other financial indicators that I like to follow for each stock I buy. Here you're looking into a company's financial statements for measures that are going to feed into that earnings number, because that's really what it's all about. Everyone here in the Bowtie Nation knows that my favorite measure is the operating margin, that measure of how well management turns sales into operating profits. But in reality, that's just one more step towards those bottom line earnings, that net income available to shareholders. It gives us a great clue into the profitability of the company compared to peers and what direction those earnings are heading. So I want to highlight a few of these financial indicators that you can use to follow a stock and then determine a fair value. I'm only going to highlight 2 measures here because I don't want to bog you down with a huge list, but you can use these ideas to compare any of the financials. So first is that operating margin, and you can find it here in the statistics tab on Yahoo, or just divide the operating income by total revenue. And both of those numbers are in the company's income statement. So that operating margin, or the profitability, shows you how well management is converting sales into operational profits. So the sales minus all operating costs. And we'll also use the return on assets, or the ROA here of the company. And this is also shown on Yahoo Finance, or you can take a company's net income for the quarter or for the year. That's the earnings from the income statement. And then you divide that by the company's total assets, which is found on the balance sheet. Okay, I know I'm betraying my CFA designation here a little bit. And for all you financial wizards, technically, you're supposed to use the average of the last 2 years' total assets for this. But we're not going to get too much into the minutiae here. Just like those earnings, there are a couple of ways to use these numbers to determine that stock price changes. First, you can compare them against the same measure at competitors. So is management at Samsung able to produce a higher return on assets or an operating margin higher compared to Apple? And knowing this gives you an idea of the financial strength and really which stock might be better. You can also follow the trends in these measures. So is Apple getting more profitable with a higher operating margin over time, or is it getting less profitable, and why? Another factor you want to follow here is insider and institutional buying in a stock. Any big money player, so we're talking here institutions like Vanguard or hedge funds like Carl Icahn, is required to disclose their stock ownership with the SEC in Form 13F each quarter. Now, company insiders, so management and the board members, they also have to report on how much stock they buy or sell. Now, this is important because it not only gives you an idea of demand for the shares, but also an insight into whether management thinks the shares are a good price. Now, you can either follow these numbers through market data. So here in the holders tab on Yahoo, you see the institutional owners as well as how much of the company's stock is held by these big money players. Then on the insider roster section, you can see the directors and management as well as their stock trades. Or you can also go straight to the EDGAR database on the SEC website, and you'd find the actual filings of these insiders and the institutional buyers. Either way, you're again looking for those trends and the big changes in these holdings. So if a hedge fund is increasing or decreasing its position, or if insiders are buying up the shares. These trends can give you a very good idea of the fair value of the shares and whether these investors think it's a good deal. Our next factor here, and this is one of my favorites, is following the industry and economic trends for a company. Now I know we're getting a little vague here, but remember, just about everything we already know about a company is baked into the stock price. The fact that Apple has an operating margin more than double that of Samsung, but trades at a higher PE ratio, everyone already knows that. You've got millions of investors poring over those earnings and the financial statements. So if all that current information is already known and in that price, the only way to determine where a stock price is going to go in the future is by having an educated idea of where these factors are going. And that means following the trends in the company's industry and the broader economic trends affecting it. For example, for Apple, how fast are the input costs for say, semiconductors and other materials rising? What are the outlooks for wages and consumer spending over the next year? In fact, some would say that a lot of this forward-looking information is already factored into stock prices as well. Those millions of investors looking at those trends, and the saying goes that the stock market is forward-looking, factoring in those earnings over the next 6 months. Now, this one's a harder sell, though, and I do think that you can make higher returns by understanding these trends better and making better estimates versus the rest of the market. If we look back at that earnings history for Apple, we see that even the Wall Street analysts were wrong by as much as 12% when it came to predicting those Apple earnings. Again, though, this is why most analysts only follow a few individual stocks or one industry. You need to spend the time to keep updated on those industry trends and how the economy is affecting your stocks. Now, our next factor determining stock prices is news headlines around the company. Now, here I'm not saying you need to predict the future or know when news is going to break about a company. You should be following those major headlines, though, and use them along with these other factors to determine how this is all going to affect those shares. And some of these you can get in front of, like if the company is expecting a lawsuit to wrap up soon, you can make your own guess on the outcome and then trade in front of the news. Other news that comes as a complete surprise, though, you can use everything you know about the company just to determine if the market is over or under reacting to the headlines. Now, that's not an exact science, but then if it were, every investor could just plug in those numbers and nobody would ever have an advantage. Follow these factors, though, really learn how to use them, and you'll be able to determine a fair value for stock prices before the rest of the market. Click on the video to the right to find how many stocks you should own. Real research on how many stocks to buy for the highest return. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.